When it comes to futures trading, one of the most frequently asked questions is trading on gaps, and many futures traders are afraid to do position trading, or in other words, they are afraid of holding a position overnight because they worry that they might suffer due to the gap opening of futures the following day. So whether it is a gap up or gap down. Hi, I'm CY Saw. In this video, I'm going to share with you the misconception of gaps and how trading gaps actually would give you advantage in trading if you have the right trading system, and how you can profit from trading gaps. So click on the subscribe button below and turn on your notifications so you don't miss any of the videos we are producing for you in this channel to help you to improve your game as a trader. So what are the so-called gaps in trading? In simple words, a gap is a difference between the previous day closing price versus the following day's opening price. So let me give you a simple example. Let's say you want to buy a product and the product is $10.50, and you would expect the price would be selling around $10.49, $10.50, or even $10.51. If suddenly the price is selling at $10.55, that means there is a 5 cents gap. So this is a small gap. So what happens if it sells at $10.70? Now then that's a huge gap of 20 cents. Got it? So here is a chart. You may be able to identify several notable gaps. For example, in circle 2, 3, and circle 5, these are easily detected gaps because these gaps are very obvious to see. How about circle number 1 and circle number 4? So these are gaps as well, because there is a difference between the previous day closing price and the following day's opening price. Now let me share with you 2 reasons why gap happens in the futures market. So there are 2 reasons. Reason number 1, gap happens because of changes in expectations. So over the night, after the previous day closing session, there may be a data release or news happening about the product that you trade. So for example, if you are trading the futures crude palm oil, it could be a data release for the monthly CPO production, import-export, fundamental changes in the vegetable oil such as soybean oil, which is a substitute for CPO product, right? Or events happening around the world that changes the sentiment with the asset valuation. So there are lots of factors that affect the changes in price. So in short, all of these factors bring about changes in expectations of investors and traders. So that's where gap happened in the following day during the opening of the trading session, where the opening price is different from the previous day closing price. So for instance, let's look at this image on the left, where the gap up means it means collectively the buyers are willing to pay higher price than yesterday's closing price. And on the opposite, which is true, is where let's look at the image on the right. When there is a gap down, it means collectively the sellers are willing to sell lower price than yesterday's closing price. So that's the reason why gap happens. And gap plays an important role not only in determining or defining the importance of the price trend, but also it identifies the strength or weaknesses of the price momentum that is involved. Now, reason number 2, gap happens because of the rollover effect for the next active month contract, where your next month contract is trading at a different price as compared to the previous expiring month contract closing price. So let's take your FKLI as an example. So let's say today is the final trading day for July contract, and tomorrow you would have to trade August contract, right? And on your chart, you would probably be seeing a gap between these 2 days. That's because a different month of contracts are trading at different values. So this is why you will be seeing a gap. Now, let's take a look at the FCPO market as an example to learn about gaps. So, how many times does a gap actually happens for this futures crude palm oil, which is the FCPO market? According to our study for the recent past 10 years, from year 2010 to 2019, and out of the 2,454 trading days, there are 2,259 trading days showing a gap between the previous day's closing price and the following day opening price. So this means that approximately 92% of the time there are gaps in trading, and this includes small gaps as well as large gaps. So here you can see that it is very common for gaps to happen in trading, and you should also acknowledge to the fact that gaps are just part of trading, and it happens most of the time, and you shouldn't be afraid of it. Now, I guess you might be wondering whether these 2,259 trading days of gap, whether it is a good gap that makes money, or it is a bad gap that causing you to lose money. I will share with you on the next slide. Now, let me share with you one of the most commonly used trend following strategy as a case study to see how gaps affect your trading performance. So here, we will be taking the most commonly used technical indicators, which is the simple moving average. In short, we call it the SMA, with a parameter of 20. So which means this is a 20 days moving average. Let's say we use this SMA 20 trading strategy to trade the FCPO market. When the price is above the moving average, we long the market, and when the price is below the moving average, we short the market. Again, from our study for the next 10 years, we found that there are 48.9% of the time where gaps are actually making money. So this is represented by the positive gaps, and there is 51.1% of the time where gaps are actually losing money, which represents by the negative gap. So here it seems like gap is not quite favorable, and it gives you a negative effect for our trading. But don't you worry about this. We will see in detail whether gap is good for us that generates profit. Now, let's take a clearer and in-depth look at how does this actually affect our trading performance over the long run. Before I show you the result, let me explain to you how do we calculate the net performance. So let's say today you are holding a long position in FKLI, and tomorrow there is a gap up of 20 points. So this is a plus 20. And if the next following day another gap up of 20 points, so we add up to the previous 20 points, so now we have a plus 40. So if the subsequent day there is a gap down of 10 points, we minus this by 10 points from our 40. So now we have a plus 20. Get it? Here we see that in a net total, whether it is a profit or a loss, over the recent past 10 years using the trend following strategy of SMA 20 as a whole, we are actually making 1,281 points of profit in the FCPO market just only by gaps. Pretty impressive, isn't it? So in other words, although earlier we see that there is only 48% of the time we only have a positive gap, but if we were able to actually looking it in detail in terms of how many points do we actually make by adding up all of the performance for the positive and negative gaps. So here we make a net return of 1,281 points in the FCPO market. So here, let me share with you another comprehensive study that we have done to study about gaps in trading. Again here, we studied the recent past 10 years using the trend following strategy of SMA with a parameter of 2 days, from 2 days moving average to a X number of days moving average, where the SMA trading strategies is optimal and making money. So here we found out that there are 49 0.6% of the time where gaps are actually making money, which is represented by the positive gaps. And there are 50.4% of the time where gaps are actually losing money, which is represented by the negative gaps. Well, here it seems like gap is not favorable and a little negative for our trading. But don't you worry about this. We will see in detail whether gap is really good for us that generates profit over the long run. Now here, we can see that in a net total, over the recent past 10 years, using the trend following strategy of SMA2 to an optimal SMA of X. So as a whole, we can see that in a net total, for each and every strategy, we have an average of making 1,204 points of profits in the FCPO market. So here we can conclude that if you were to do position trading by holding your position overnight, you are actually able to capture this additional bonus of profit due to gaps. So in short, before you look into this video, you may have a negative perception about gaps in trading, and you may be even afraid that or fear that gaps could cause you losses, because gap is something that we are unable to forecast or predict what is going to be happen to the following day's opening price, right? So today, after watching this video, hopefully I have cleared many of your doubts and questions about gaps. And today, you will be seeing gap in an entirely different perspective. So as I have shared with you earlier with all the research results about gaps, we have already discovered that gaps from the perspective of how many times does gaps occur and what's the performance of gaps in terms of points, whether it is a profit or a loss. So here we can conclude that if we are looking from how many times gap happens, it is a little negative, because the number of times for negative gaps that happen are actually slightly more than 50%. But if we are looking from the perspective of profit and loss in terms of how many points that we are actually making from the market based on the research study for the past 10 years. Now, you may have already realized that gap isn't really a bad thing after all, right? Because even with just only a simple good trading strategy, you are still able to make money and profit from the market. And gap is actually your friend. Now, let me share with you the two general types of trading. For those who are trading intraday, where you do not hold a position overnight, at the end of the trading day, you have cleared all of your position to zero. So meaning you don't have any position, and of course you won't be facing any gap risk at all. And it also means that you are not going to benefit or making money from the positive gaps at all. And the earlier 1,200 points of profit from gap is not related to you. However, whereas for those of you who are trading or doing position trading, where you are actually holding positions overnight, and you will be facing the risk of having gaps. Now, provided you have the right trading strategies and trading systems that are profitable, and because you are taking the risk of holding positions overnight, and you are actually having an extra bonus of profiting 1,200 points just from gap itself by taking the risk, I think it's a pretty good compensation for taking the risk of holding positions overnight, right? I understand many of you as a trader, you are afraid of gaps, especially gaps that cause you to lose money in the market. However, if you have a proven back-tested trading system, in fact, we have already included all of the factors such as gap ups, gap downs, positive gaps as well as negative gaps. We have also taken into consideration of optimizing your entry and exit point, when and where you are going to buy or take profit, when and where you are going to sell, and how much to cut loss. So in short, with a back-tested trading strategies and trading systems, you don't have to worry about gap up or gap down. You also don't have to worry about negative gaps because you already have a back-tested trading strategies and trading systems to give you the precise entry, exit, and cut loss method, how you are going to manage your risk as well as your money management, so that you can trade without fear or worrying about too many things, and you can be confident and certain of your trading approach. If you would like to learn how to set up your own profitable futures trading system so that you will have the confidence to hold positions overnight, then I would like to invite you to join our upcoming futures trading strategies and system FTSS class and excellent trading mastery class, so that you can learn how to profit through gaps with confidence and certainty. And please don't forget to click on the subscribe button and notification bell right now so you won't miss free trading videos that we are posting constantly on our channel to help you improve your game as a trader. Until next time, this is UI Song, wishing you good luck and good trading.